Hey guys, this is Adam from Dodjit.com and this is your video briefing for Monday the 4th of January 2010. Wow, I'm not used to saying 2010. Up until now it's been 2009. First of all, I'd like to wish you all a happy new year. Now, in this video what we're going to do, we're going to focus on a monthly chart of the Dow Jones. I want to show you a few things. Then we're going to flip over to a few different Forex charts, currency pairs, stuff like that, like usual. And we'll probably finish it off with what we expect, at least going forward, in the first month of 2010. Now, the first chart that I brought up actually is the Dow Jones. It's a monthly chart. And the reason for that, basically, I want to show you like this. 2009 was absolutely, well, you can really state it and class it as a rebound year. The major indices from mid-2008 completely dropped, plummeted lower. They dropped to their 2003 lows. Check this out, roughly around here. We found a little bit of support around this area and then bounced higher. Now, during 2009, the first quarter of 2009 wasn't that good. And what happened was that the markets just flip-sided throughout, I think it was March, roughly around March, and since then we've received roughly around a 10-month rally. Now, the indices themselves, I personally think that they are way overbought. I think we should be expecting a minor correction. If you look carefully at the index itself, you can see, just check this out, that we have now we've broken the 38.2% level, we've broken the 50% level, and now we're heading higher for the 61.8% level. Now, in my opinion, we've already reached so high that it will be pretty disappointing if we don't touch that level. We're talking about the level of, let's just put the percentages on, show values. We're talking about 3,692. Now, what I'm thinking though is that everyone's talking now about this January effect. What happens normally in January is that the markets, they climb a little bit higher. We're normally talking about an average of roughly around 3 to 4% during January. And obviously, if that does happen, then this will probably coincide with a minor rally higher to roughly the 61.8% Fibonacci level. Now, my problem is that I don't really believe that this time round we're going to receive such an effect during the month of January. And what I think is personally going to happen, I think we're going to continue to consolidate a little bit. And I think the first quarter in general, for those of you that are swing traders, I think you're going to find it pretty hard, because if we just flip over to a daily chart for the moment, you can see that number one, yeah, we are still trading in this massive uptrend. But then again, look at the price pattern compared to what happened a couple of months ago. We received these massive rallies, and now we're just kind of drifting higher. And this is causing a lot of problems on stocks. When I analysed a lot of the stocks in the different sectors, it's now becoming quite hard to find some nice positions. And what I think is probably going to happen is, if we don't receive this January effect that will really, push the indices higher for another couple of percent. So I think what's going to happen is that we're probably going to consolidate around this area. We might even break this downtrend line and come back to our 50% Fibonacci level. Now, this is a Fibonacci level from the monthly chart. Just remember, it's this level around here. So that's what I'm thinking at the moment. Now, if you ask my personal opinion, is it risky to take trades at the moment? So then, yeah, I'm going to be honest with you. We're talking about high risk trades at the moment, especially after such a rally. We've had a rally for over 10 months. So, any position that you're going to go into at the moment, obviously you're going to have to take into consideration that those positions are going to be classed as high risk ones. Now, what I just want to show you as well, let's just flip over to the website for a second. And what I'm going to do is I'm going to do a little bit of marketing at the moment. I'm going to take this opportunity. You can see here, normally we place a chart here every day. It's like an interesting chart, things that we find of interest. We plot it on the website. You can just click on it right here. And then what happens is the chart just pops up. Now, this is the volatility index. We've spoken about this index numerous times in the past. We're talking about an index that takes into consideration implied volatility of options of the S&P 500. Now check this out. On last week, the final day of trading, look what happened. Volatility increased higher as the stock market decreased. And if you check this out, this is classed as a declining wedge. Now, normally this is a type of reversal pattern, which means or which hints that volatility could increase slightly higher. Now, if volatility is going to increase slightly higher, what does that mean for stocks? Probably it will mean that we're going to either continue to consolidate a little bit or drop a little bit lower. We might even come down to test this trend line. That's why I'm saying at the moment you have to be careful. For those of you that have taken this massive rally higher, my opinion, low exposure now in the market. Now, in the last video, we talked also about the different sectors that we're starting to look at. We are now personally starting to look at sectors or individual stocks that do not resemble the S&P 500 or the Dow Jones. We're looking for type of lagging sectors that have been behind the market, because that's where I think the money is going to go into. Always think to yourself, where is the money headed? Where is it going? People want to make, and they don't want to go into high risk positions. So that's what I'm thinking at the moment. Regarding the first quarter, I personally think it's going to be a little bit of a correction quarter or consolidation before the summer run. That's what I'm thinking. Now to just top this video off, I'm going to just finish off with a few different Forex pairs. Now regarding also the beginning of the week, don't expect too much. We've got the NFP result, unemployment results coming out on Friday. The ADP result coming out on Wednesday. So I think most of the volatility is going to pick up towards the end of the week. Regarding the euro US dollar, looks like we are now going to be stuck in range a little bit. I wouldn't expect much movement until Wednesday, Thursday, Friday, until the second part of the week. Regarding a complete analysis of the euro US dollar, you can find that on the website. We published that yesterday. Now, flipping over to the US dollar against the Japanese yen, we stated in previous videos this downtrend line. We actually gave a nice signal on this. Oh, let's just plot that. A nice signal on this going higher, and we stated that if you are in this massive trend going higher, this is normally what I class as a continuation trend or a continuation setup, because we took the trade on the break going higher. I think now is a good time already to exit the trade, especially the RSI is now starting to head or coming close to overbought territory. Obviously also we got the NFP result coming up on Friday, so anything can happen. Regarding the rest of the pairs, the Australian dollar against the US dollar, it's not really going anywhere. We've got this downtrend line roughly around here. We've got our resistance level which acted once as support. It does look like it's still consolidating a little bit. Not really that much action on this pair. Now the last chart I just want to finish off with is crude oil. Now I know that some of you don't trade this. I personally trade it through different ETFs and stocks that I trade. Just want to show you at the moment that we are now at resistance. You can see resistance roughly around here. We're coming close, at least. We're at 79.81 at the moment. Resistance is at 81.06. This has been a massive rally higher, and we had this rally after we broke this downtrend. We received this type of false break around this area and just climbed higher. I would expect a minor correction around this area, especially after such a run up. Regarding going forward, how we're going to play it this week, the first couple of days, I wouldn't read into the markets that much. Whatever they do, you know, either sit on the sidelines a little bit, see what's happening. Obviously, we're going to have a hectic week towards the second part of the week. I think after the NFP result comes out, we're going to receive a few nice trends and take into consideration the overall major trend for the next couple of months might not be like you expect, and we could receive some consolidation. Hope you liked the video. We'll keep you posted. My name is Adam from Dodjit.com.